In this video we're diving deep into the wild world of finance, looking at none other than BlackRock and their recent moves in the crypto space. Specifically, we're going to be talking about the possibility of a Bitcoin fork, something that's got the entire market buzzing. Before we begin, please like and subscribe. Also, don't forget to check the Coin Sniper link in the description. Look, I know what you're thinking. A Bitcoin fork? Isn't that old news? But trust me on this one, the way BlackRock's approaching this is different. And it has huge implications for all of us, especially if you're invested in crypto in any way, shape or form. So buckle up because we're about to break down exactly what BlackRock is doing, why it matters, and what it could mean for your portfolio. Let's get into it. Okay, so before we get into the nitty-gritty of Bitcoin forks and all that, let's make sure we're all on the same page about who BlackRock even is. Now, unless you've been living under a rock, you've probably heard of them. They're only, one of the biggest asset management firms on the entire planet. Seriously, these guys manage trillions with a T of dollars for their clients, which include, everyone from pension funds to governments to, even regular investors like you and me. Now, here's the thing about BlackRock. They're not just some passive investor sitting on a pile of cash. They're known for being pretty aggressive when it comes to, making money. And they've got their fingers in a lot of pies, from stocks and bonds to real estate and, yep, you guessed it, cryptocurrencies. So when BlackRock makes a move, the entire market tends to sit up and take notice. And their recent interest in Bitcoin, let's just say it's got a lot of people talking, and for good reason. Now let's talk about how BlackRock actually makes its money, because understanding that is key to understanding why this whole Bitcoin fork thing is such a big deal. See, BlackRock's business model is pretty straightforward. They charge fees for managing other people's money. Sounds simple enough, right? But here's the kicker. Those fees are based on a percentage of the assets they manage. So the more money they manage, the more money they make. And trust me, they manage a lot of money. We're talking trillions with a T here, people. So, it's in BlackRock's best interest to keep those assets growing. And how do they do that? Well, by making smart investments, of course. And that's where Bitcoin comes in. See, BlackRock's been sniffing around the crypto space for a while now, and they've clearly realized that Bitcoin, despite its volatility, has the potential for huge returns. Now, this is where things get really interesting. Remember how I said BlackRock's known for being aggressive? Well, they've been making some big moves in the crypto market lately, and not all of them have been positive. In fact, I've been tracking their on-chain activity through Arkham, and let me tell you, it's been a wild ride. We're talking about massive sell-offs of Bitcoin and Ethereum, worth millions upon millions of dollars. And this isn't just some random market fluctuation, folks. This is BlackRock strategically liquidating their crypto holdings, and it's sending shockwaves through the entire market. Now I know what you're thinking. Graham, why would BlackRock dump crypto if they're so bullish on it? Well, that's the million-dollar question, isn't it? And honestly, no one knows for sure except for BlackRock themselves. Okay, so to understand why BlackRock dumping crypto is such a big deal, we need to look at their history. See, BlackRock's no stranger to controversy. In fact, they've been accused of market manipulation in the past. Now, I'm not saying they're definitely doing anything shady here, but when you're as big and powerful as BlackRock, you can't help but influence the market, whether you intend to or not. Think about it. They've got trillions of dollars at their disposal. If they decide to buy or sell a large amount of any asset, it's going to move the market. It's just simple supply and demand. And with crypto, it's even more volatile because it's still a relatively new and unregulated market. So BlackRock's actions here could have a ripple effect, triggering a domino effect of sell-offs that could send the entire market into a tailspin. Now there's another layer to this whole BlackRock saga that we need to talk about: ESG investing. For those who don't know, ESG stands for environmental, social, and governance, and it's become a huge factor in investment decisions lately. Basically, it means investors are looking at companies' environmental and social impact, not just their profits. And BlackRock's been a big proponent of ESG investing. In fact, their CEO, Larry Fink, has been very vocal about it. But here's the thing. Bitcoin has a dirty little secret, and that secret is its energy consumption. Mining Bitcoin takes a lot of electricity, which obviously isn't great for the environment. So, there's been a lot of speculation that BlackRock's recent crypto dump could be related to ESG concerns. They might be feeling the pressure from investors who are worried about the environmental impact of Bitcoin mining. And if that's the case, it could have major implications for the future of Bitcoin and other cryptocurrencies. And if that wasn't enough drama for you, BlackRock's also been caught in the crosshairs of a major lawsuit filed by the state of Texas. Now, this lawsuit's not directly related to Bitcoin, but it does highlight the kind of influence BlackRock has and how they've used that influence in the past. Basically, Texas is accusing BlackRock, along with other asset management firms, of boycotting fossil fuel companies in the name of ESG investing. They claim that BlackRock's been using its financial might to pressure companies to adopt more environmentally friendly policies, even if it hurts their bottom line. Now, BlackRock denies these allegations, of course, but the lawsuit is still ongoing, and it's definitely something to keep an eye on. Because if Texas wins, it could have a chilling effect on ESG investing and force BlackRock to rethink its entire investment strategy. Alright, so now that we've covered all that background, let's get to the heart of the matter: BlackRock and the Bitcoin fork. Now, I've been doing a lot of digging into this, and what I've found is both fascinating and concerning. See, there's been a lot of talk about BlackRock potentially launching their own Bitcoin ETF, which would be a huge deal for the crypto market. But what's even more interesting is that there's evidence to suggest that BlackRock might be trying to fork Bitcoin. Now, I know that sounds crazy, but hear me out. I was going through some SEC filings for BlackRock's proposed Bitcoin ETF, and I stumbled across something very peculiar. So, in the SEC filings for BlackRock's Bitcoin ETF, there's this one line that really jumped out at me. It basically says that BlackRock has a fiduciary duty to maximize client wealth, and that adopting a less valuable fork of Bitcoin would undermine that responsibility. Now, on the surface, that might seem innocuous enough, but when you really think about it, it raises a lot of questions. Why would BlackRock even mention a Bitcoin fork in the context of their ETF? And why would they specifically say that adopting a less valuable fork would be bad for their clients? It's almost as if they're trying to preemptively justify forking Bitcoin by saying that they're doing it for the benefit of their investors. And the way they phrase it, it's almost like they're assuming that their fork would be the more valuable one. Now, if BlackRock were to actually fork Bitcoin, it would be a seismic event in the crypto world. We're talking about a potential chain split, where you have two versions of Bitcoin, the original and the BlackRock version, and that would create a whole lot of uncertainty and confusion in the market. Which version of Bitcoin would be more valuable? Which one would exchanges support? Which one would businesses accept? It would be chaos, and that chaos could easily trigger a bear market as investors panic and sell off their Bitcoin holdings. We're already seeing some signs of that happening with the recent market downturn. And if BlackRock does go through with this fork, it could be the catalyst that sends the market into a full-blown crash. Now, I'm not saying that BlackRock will definitely succeed in forking Bitcoin. Many have tried before, and they've all failed. But BlackRock's different. They have the resources, the influence, and the sheer willpower to make it happen. Look, I know this is a lot to take in, and you might be thinking I'm just some guy on the internet spouting conspiracy theories, but I'm not making this stuff up. This is all based on publicly available information. In fact, I'll even link the SEC filings for BlackRock's Bitcoin ETF in the description below, so you can see for yourself. The key details about the potential Bitcoin fork are laid out on page 22. I encourage you to read it and come to your own conclusions. But here's the bottom line. BlackRock is a powerful force in the financial world, and their actions have the potential to reshape the entire crypto market. Whether they succeed in forking Bitcoin or not, their involvement is a sign that the game is changing. Time to wrap it up. Hope you found this video interesting. Don't forget to share your thoughts in the comments and like and subscribe. See you in the next video.